The UK economy, of course, is going through a patch of somewhat slower than anticipated growth, somewhat higher than anticipated inflation. But in our analysis, these reflect temporary factors, principally. On the production side, the impact of the spike in energy and commodity prices, some weakness in the housing sector. On the inflation side, the same. The reflection of the spike in energy prices is having an effect. We think these will be temporary and that the UK economy will return to the anticipated path of growth of around, it's growing now, but it'll grow about 1.5% this year, 2.25%, 2.5% next year.
And further to that, you think that the UK government's current policy mix is correct?
Indeed, we think the deviations from the expected path represent these temporary factors, and therefore the deviations should not lead to a change in policy, that the current mix of fiscal consolidation and loose monetary policy is appropriate for the moment.
You talk about these temporary factors, but UK inflation's been running above target for quite some time now. And I thought I heard you say that it was going to do so for the rest of this year. That doesn't sound very temporary.
Well, we expect that inflation, given the feed-through of the rise in energy and commodity prices, our expectation is that inflation will end the year somewhat above 4%, but next year back down to around the 2% target range.
And it will come down because these temporary factors will go away?
Are dissipating, exactly. They're working themselves through the system and will dissipate. With the level of activity and unemployment, our expectation is that the inflation scare will recede.
Unless, of course, we get another spike in oil prices. Is that a wild card that you're concerned about?
Well, it's certainly a possibility. There are many things that could happen, and naturally any policymaker would be willing to take into account important changes. However, in the UK case, it's also important to note that there is flexibility built into the current program, in the sense that on the budget side, that automatic stabilizers can be allowed to accommodate or compensate for deviations from expectations, and monetary policy can be loosened further if necessary.
Do you expect that might be necessary? Is there a potential?
No, as we've said, that our view is that the current deviations are temporary. The current policy mix, therefore, remains appropriate.
Okay. You will have heard about this article that's been written to the Observer newspaper by 50 prominent academics in this country who have argued that the pace of cuts here in the UK have been too quick, too deep. What do you say to them? You've agreed with, you've supported the UK government's policy mix. Why are they wrong?
Well, first of all, I don't think there's broad disagreement about the policy mix, in essence, of the need for fiscal adjustment and consolidation. I think there's broad agreement on that. I think there's broad agreement that during that period, and as long as the inflation outlook remains under control as we think it is, that monetary policy should remain loose. So we're talking about details of implementation. In that regard, it's important to remember that the tightening so far, the reduction in the deficit so far, has represented, on the one hand, the resumption of growth in the economy, on the other hand, some tax measures, and the reduction in budgetary spending as a percent of GDP this fiscal year is about 0.5%. But the rise in spending that took place during the period since the onset of the crisis is a large multiple of that. Spending is far higher than it was before the crisis.
So are you saying, in essence, that there's no argument that there's been too much cutting going on in the UK?
Sorry?
Are you saying that there hasn't been too much cutting?
Sorry. That too much, this is a judgment for the British people to make in terms of policy mix. But in terms of whether the pace seems appropriate and consistent with the goals of the program, that we think is the case.
Isn't it also true that the real pain of these austerity measures haven't even really started to rear their heads, with the bulk of these public sector job cuts going to be coming through next year?
Well, there's no question that fiscal consolidation does involve some, on the one hand, some difficulties for individuals affected, no doubt, that it will also, as we've said clearly, represent some headwinds to near-term growth. At the same time, the reason for doing it is, first, that it helps guarantee disinflation that'll bring interest rates down. Secondly, that it will boost confidence in the medium-term sustainability, responsibility of fiscal policy that is necessary to produce the investment and job growth in the private sector that is absolutely central to the long-term health of this economy.
Speaking of confidence, when you look at the bond markets and the currency markets, is that something that you're taking into account, how investors seem to feel about the UK economy? What do the markets tell us?
Well, in general, markets have been, in some cases, for example, in the peripheral countries of Europe, have been extremely reticent. In most of the advanced economies, more favorable. So far, the markets tell us is that they have a favorable outlook with regard to the medium-term inflation prospects in the UK. So that gives confidence that monetary policy remains appropriate at this time, and also gives some confidence that the basic stance of policy seems to be accepted as appropriate by investors.
Appropriate at this time. Do you think that the BOE could afford to wait until next year when you say that target will come down before it has to start to raise rates?
I wouldn't want to get into specific advice to the Bank of England, but we've said very clearly is that the current rise in inflation is temporary, that we see it returning to their target zone, and therefore there's no need to change that mix of fiscal consolidation, but loose, accommodated monetary policy.
How do you describe the impact of the weak pound on the economy? Is that a net positive or a negative?
In the current circumstances, that should be helpful for exports, which is part of the growth strategy, which in turn should feed through to stronger investment and job growth.
Okay. I wanted to ask you, if I could, quickly about the situation with Greece. You told us, well, first of all, there's speculation all the time that Greece will have to restructure, will have to default. Do you think, and some are even saying that it may have to leave the Eurozone. Where do you see the Greek situation 12 months from now?
Well, our expectation, especially in the wake of the agreement that the Greek authorities reached with the European partners and ourselves on a program of policy adjustment designed to bring their current program back on track, that 1 year down the road, we think that the Greek economy will be through its contractionary period and will have reestablished the basis for sustained growth. Nonetheless, there is going to have to be some significant adjustments to reduce the still very large fiscal deficit, to restore investor confidence, to improve the productivity and growth prospects in that economy. So there's the need for a very, very ambitious policy adjustment, and that policy adjustment, as implemented, will be supported strongly by their European partners and by the IMF.
If they can't get it done?
Oh, let's not speculate. The authorities have just renewed in very specific terms their intention to do what is necessary to restore health to the Greek economy.
In January, you told us never say never when it comes to more bailouts in Europe. Since then, we've had Portugal. Are we done with the bailouts in Europe?
Well, as I think I should repeat my words from previously, never say never. But the three most difficult cases, Greece, Ireland, and Portugal, all now have reached agreement with their European partners and with the IMF on adjustment and stabilization programs. The Irish program, by the way, seems on track. The Portuguese program was just approved by the partners, and Parenthetically, there was just an election in Portugal that will result in a change of government, but both the outgoing government and the incoming parties had agreed to support Portugal's programs. So hopefully this will produce the desired results.
How do you feel about the BRICS nations coming together to ask for this second position, a position between the head of the IMF and your current title, or your previous title? Do you support that?
I'm not aware of any specific request or proposal, frankly.
From the BRICS, okay. They said that they were building some consensus. This is what we heard from the Russians, to perhaps move up into a position right below the director. If the director isn't a BRIC, then they would need that second position. Does that seem logical?
The structure of the IMF, like the choice of the managing director, is a matter for the IMF's membership to decide.
Okay. Finally, I'd like to ask you about how you would score the institution 1 out of 10, and yourself, on how you've dealt with the PR crisis surrounding the resignation and the arrest of Dominique Strauss-Kahn.
Well, I wouldn't want to get into that kind of index number issue. Let me just state the obvious. There was great shock and sadness over these circumstances, as you could imagine. At the same time, this institution comprises 2,400 very talented, very dedicated individuals that are fulfilling some important responsibilities given to us by our 187 member countries. And one person, no matter how talented, is not the sole engine for an institution like the IMF. My colleagues have responded with energy, with focus, and with dedication to fully responding to all the responsibilities that face us.
Okay, and you guys have predicted growth. You've predicted that the recovery is going to resume at a moderate pace.
That's right.
What is driving this recovery in the UK? What's going to continue to drive it?
Indeed. As you've noticed, the job growth has accelerated in recent months, and that's producing income growth. At the same time, we've seen a stabilization of energy prices, so we're no longer going to lose purchasing power to rise in energy prices. So on the consumer side, things should begin to improve moderately. On the business side, business profitability is strong, and their financial situation is very good. Exports are starting to grow, and that should lead naturally to somewhat stronger business investment. So that combination, exports, business investment, feeding through to sustained employment growth and eventually stronger consumption is going to be the fuel for an acceleration.